Hello, ladies and gentlemen. Welcome to Wipro's third quarter fiscal 24 earnings press conference. My name is Sandobar Crore. I'm the head of Global External Communications, and I'll be your moderator today. Joining me today on stage is our executive leadership team, who will be presenting our results. From your left to right, our Chief Operating Officer, Amit Chaudhry, our Chief Executive Officer and Managing Director, Thierry Delaporte, our Chief Financial Officer, Aparna Iyer, and our Chief Human Resources Officer, Saurabh Govil. As usual, we'll kick off the conference with remarks from our CEO, followed by an operational update from our COO. Our CFO will conclude our formal remarks with an overview of our financials. We will then open the floor for questions. Right now, please allow me to welcome our CEO, Thierry Delaporte, to the podium.
Hello everyone, welcome to this new facility. Thank you for joining us today. We're really glad to have you here, and for sure, starting with wishing you the best wishes to you for the new year. So I'll begin today's conference with an overview of our third quarter results, details of our sectoral performance, the demand environment, and direction for the coming quarter, as always. Earlier today, you've seen we reported our numbers to the market and to our board. I'm pleased to share that we're starting to see some healthy indicators for growth. Our IT services revenue for the quarter is at the top end of our guidance. Revenue stands at $2.66 billion in reported currency. We've continued to book deals at a healthy pace. Even though Q3 is a short quarter due to the year-end holidays, order bookings in total contract value terms stand at $3.8 billion. Our large deals TCV for the quarter was just over $900 million. On a year-to-date basis, that's a 20% growth. We booked 14 deals this quarter in the greater than $30 million category. By contrast, just for you to keep that in mind, we had booked 11 of such deals in the third quarter of last year. Net income for the quarter expanded by 1.8% sequentially. Operating margin stands at 16%, despite seasonal furloughs and the annual salary increases for our employees, as you know. On a year-to-date basis, margins has improved by more than 60 basis points. As you know, we have consistently invested in our people, in our processes, and organizational efficiencies over the last several quarters. These investments are paying off. Our results demonstrate that at a fundamental level, Wipro is increasingly more streamlined, proactive, and efficient. This has boosted our client trust in our teams, improved our win rate, and also the type of deals we are winning. That is more of complex transformation deals. Wipro is not only benefiting from vendor consolidation, but we are also adding new logos while growing our business with existing clients. In fact, our clients tell me that they are seeing a more confident and a united effort from us. One Wipro. We are leveraging the depth and breadth of expertise and diversity inside Wipro. Contributions from our acquired firms, I name a few, Capco, Rising, Designit, are more prominent and well received. The demand environment overall, let's be clear, remains cautious. Clients are still making conservative investments, still looking for efficiency, more returns on investments, and better optimization of existing investments. But we are seeing some indicators for growth. If you remember, we had called out a possible slowdown in the economy as growth in our consulting business slowed. We know that when the market turns, consulting will be the first area to bounce back. In that context, I'm pleased to share that we've had a good performance from our consulting business, with Capco reporting a double-digit sequential growth in order booking, the highest in the last 4 quarters. Turning to our strategic market units now. We recorded a strong quarter for the Americas 1 market unit, where we booked half of our 14 large deals this quarter. Revenues in the market grew 2% sequentially, led by healthcare, which actually grew 9% sequentially. In our Americas 2 market unit, we continue to see some softness. There is no question, largely on the BFSI and the energy and utility side of the business, hence resulting in a 1.3% drop in revenue quarter over quarter. That said, there's strong momentum in order bookings, which in total contract value terms increased 46% sequentially. In Europe, we won 4 large deals in the third quarter despite the continuing economic weakness. These 4 new transformative deals add up to a nearly $300 million in bookings. These deals underscore the success of our strategy in this market. There's no doubt. Revenue from Europe, however, decreased 4.3% sequentially in Q3. Across the board, I want to say, across the board, but especially in our APMEA strategic market unit, we have worked on reducing low-margin accounts while slowly moving towards higher value transformation projects. Revenues in this region declined 5.4% quarter on quarter. However, this strategy of pivoting towards higher value business reflects in the margins we delivered in the region. Margin rose 240 basis points sequentially to 13.8%. That's the highest in the last 6 quarters. And once again, we are seeing consulting, especially Capco and Rising, play a big role in the complex deals we are winning in the market. To continue this rigor, we made some changes to our growth offices recently, and we've communicated on that. With the foundational pillars for sales excellence set out by the growth office over the last 2 years, we moved some of the growth office functions inside the strategic market units, creating an even tighter integration with the SMUs. With this, we reinforced how we nurture large deals in each geography, and we respond faster to changing market needs. Simultaneously, we continued to streamline our operations as per the plan. Leverage artificial intelligence and automation for efficiency across all functions and business areas. Add to that the learning and development and reskilling of our existing talent base, besides optimizing our talent pyramid to better serve client needs. Multiple initiatives are in place. I request Amit to share highlights of some of those programs with you today. What I can say, though, with confidence, is that Wipro is a better partner for our clients today. We are more agile, one that is responding to and evolving with our clients and their needs. Amit will also share with you highlights of the work done around account delivery and service excellence. This really is the centerpiece of our efficiency play and increased agility. We continue to invest in areas that we know are going to remain fundamental for our long-term success. People, our most valuable asset. We awarded our colleagues their performance-based annual salary increases recently, you know. The promotion cycle just closed, and we'll be making the announcement soon. We've continued to stress on and offer training and development options and grow opportunities to our employees. This is critical to why people continue to choose to work with and give their best to Wipro. Of course, returning to work once again more regularly after a few years of fully remote work has absolutely helped energize the culture and the atmosphere in our offices. You can feel it today. Then there is AI. It would be amiss not to share how we are using AI ourselves as an organization and, of course, for our clients. AI is now moving from, I would say, the curiosity and experimentation stage to becoming vital to business strategy. In fact, we can confidentially say that every long-term, large deal now has an AI component. A substantial portion of our clients are looking for us to develop use cases tied to their business goals. They want us to use AI models to drive tangible results. AI is now embedded across most of our existing solutions and offerings. In addition, every business line is working to launch new offerings that use AI. For example, in our full-stride cloud business, an area that's particularly hot when it comes to the use of GenAI is digital workplace services. Leveraging GenAI to lighten the load on service desks, deliver faster and better client service is now part of every RFP in this space. One of our largest deals in Europe this quarter is to transform digital workplace services of a multinational telecommunications company. This will help improve client satisfaction, reduce operating expenses. We will build an AI-powered platform for them that provides service desk, on-site, and remote support services for 100,000 users and 80,000 managed services across 240 locations worldwide. In engineering, we are seeing strong interest for AI in the automotive and manufacturing industries. Clients in these industries want AI to increase productivity in the R&D process and accelerate new product development. With Wipro Enterprise featuring, we are helping clients accelerate adoption. We are leveraging Wipro's GenAI framework and studio to develop key assets at all levels of the AI stack, including models, platforms, and solutions. We will help clients with model development, performance, privacy, and compliance. We're also building governance frameworks around responsible, sustainable, and ethical AI development, because we are Wipro. In fact, we are working with a global healthcare insurer to develop a GenAI-powered knowledge research solution to transform their contact center. The goal is to improve patient experience and operational efficiency by cutting the time it takes to analyze healthcare plan documents and response time. We have developed a GenAI-powered assistant for a Fortune 500 investment and insurance firms. This assistant improves quality and reduces the time spent in crafting personalized email campaigns. Earlier results showed tangible growth in click-through conversion rate. Additionally, expanding our relationships with strategic partners is definitely a critical part of our AI 360 strategy. During the past quarter, we collaborated with NVIDIA to help healthcare companies build AI-driven strategies, products, and services. This partnership with NVIDIA is a great differentiator for us, given our domain expertise in the healthcare sector. We're also expanding our partnership with IBM to invest in new joint solutions built on IBM Watson X. That makes it easier to deploy reliable, responsible, and sustainable AI solutions. To do all this in a consistent, in an innovative, scalable fashion, we are preparing our workforce. Today, 210,000 Wiproites around the world have trained on AI 101 skills. We have now rolled out persona-based learning pathways for different roles and functions. Our goal is to ensure that everyone at Wipro has the skills to fully leverage AI in their everyday work and for AI-related client projects. And it started with me. We are accelerating Gen AI adoption internally by integrating the technology across our entire portfolio of platforms. This is resulting in quality and productivity improvements across HR, marketing, sales, operations, as well as software development and quality engineering and testing. Our investments in our AI 360 ecosystem, combined with the strategic value our consulting business brings to clients, is the reason we are increasingly the preferred partner for our clients. We are confident that we have the right vision, the right strategy, and the right leadership to continue to grow and keep us competitive, resilient, and ambitious. On to our guidance now for the next quarter. We are guiding for a sequential growth of -1.5% to +0.5% in constant currency terms. We expect margins to stay range-bound like in the last few quarters. As the market starts to turn around on the back of our transformation and efficiency plays, we expect to see improvements in the coming quarters. Absolutely. With that, I'll turn it over to Amit for his comment. Thank you, everyone. Amit, over to you.
Thank you, Thierry. Hello, everyone. Today, I'll be talking about some updates on our business transformation, as well as focused initiatives that have helped us to maintain our margin in the current demand environment. Our focus on the delivery excellence side continues to be excellent client experience and getting them best-in-class solutions. This is based on our now consistently leveraging our 4 global business line model to create the best possible ecosystem to build talent as well as deliver the best-in-class solutions for our clients. This is being supplemented by strong delivery governance through an investment in our better program management, by building the delivery leadership cadre through focused training interventions, AI-based assessments, and skilling for emerging technology trends. We have a dedicated AI delivery council to identify opportunities to infuse AI into delivery activities. Our account delivery executives are at the core of our client experience. We are enabling and empowering them to make decisions that are client-centric and with a client centricity in their mind. They are driving initiatives and solution offerings with AI first and one Wipro approach. Another area of work has been the restructuring of low margin accounts. Thierry talked about it briefly, especially in the context of our improved performance in the APMEA region. Low-margin businesses are being reduced steadily through a multi-pronged approach. Moving to our operational excellence side, Thierry has spoken about how skill is our biggest currency. We are working on end-to-end processes to provide right skill at the right time, at the right cost, at the right location. This we are doing through multiple initiatives that span across an improved forecasting process, proactively skilling through account academies, pyramid optimization, improving our talent supply chain through an AI-powered talent marketplace, effort optimization, automation, and strong change management. We are reducing our operating costs and optimizing our organizational design across all units and geographies. This is enabling us to build an agile Wipro better suited in this dynamic market. We are heading towards more and more AI-based automation internally, resulting in productivity and better efficiency. Thierry talked about how we are taking AI-led solutions to our clients. We have a similar rigor for our internal-facing AI applications, like the AI-powered talent marketplace, persona-based learning pathways for our sales and business teams, our developers, our engineers, and our architects. We are using AI for simplification of our employee user experience as well. We are aligning our operational structure, skilling academies, and Gen AI capabilities to market demand, client expectations, and ever-evolving internal Wipro processes. We are in fact the biggest customers, or one of the biggest customers, of our own AI internal ecosystem, AI 360 ecosystem. These transformation programs and margin-enhancing initiatives are delivering results. Our top priorities continue to be profitable growth, delivery excellence, and internal capability development, all leading to sustainable success. And now I hand over to Aparna.
Hello everybody, and wish you all a very, very happy new year. Let me highlight to you our financial performance for the quarter ended December 31st, 2023. We had a strong execution during the quarter, which has led to our revenues being at the top end of our guidance. In constant currency terms, our revenue declined 1.7% sequentially. As we had called out last quarter, we started the quarter with stiff challenges. One, that of weaker demand, seasonal furloughs, and salary increases for our employees effective 1st December 2023. I'm pleased to share with you that our margins have remained resilient as we executed on 3 counts. 1, maximizing our revenue performance, realizing savings from pyramid improvements and delayering and FPP productivity, and 3, reducing discretionary spends. On a year-to-date basis, we've improved our margins by nearly 63 basis points. We worked on rationalizing on all aspects of working capital and have generated about close to $600 million of operating cash flows during the quarter. This is 177% of net income and highest in the last few quarters. Our gross cash was at $4.6 billion and our net cash was at $2.7 billion. Both have increased year on year despite completing a large buyback in July of last year. Speaking of capital allocation, you would have read in the press release that our board of directors have declared an interim dividend of rupees 1 per equity share. Our net income for the quarter is at INR 26.9 billion rupees, which is a 1.8% increase quarter on quarter. Our EPS has increased by 2% on a quarter on quarter basis. In a weak revenue environment, it is heartening to note that our EPS has improved 2% on a year-to-date basis. Our EPS includes a charge that we've taken in our P&L on account of the restructuring exercise that we've undergone this year. I'd like to confirm that we've completed the restructuring that we wanted to do, and we do not anticipate any further charges henceforth. In terms of other important metrics, our effective tax rate remained flat at 24%, and our hedges continue to be in line with our policy and was at about $3.4 billion. Finally, I would like to reiterate the guidance for Q4 24 stated by Thierry. We expect revenues from our IT services business segment to be in the range of 2615 to 2669, which translates to a sequential guidance of negative 1.5% to a positive 0.5% in constant currency terms. With that, we'll be happy to take any questions.
Ladies and gentlemen, if you have a question, please raise your hand and wait for the microphone. Please introduce yourself before asking the question.
Yeah. Okay, hi. Here, I'm Ritu from CNBC. Few questions on your numbers, starting with the revenue, a fourth quarter of decline, that you've now reported despite all that positive outlook that you're telling us about. Even vertical-wise, barring a couple like healthcare, etc., you've seen a decline across the board sequentially. Europe has degrown by almost 4.3%. I wanted to understand, going forward, we have the Q4 guidance, of course, but what are the conversations with clients like? What are they telling you about spends? What are the areas of concern that you see? What are the areas that you're optimistic about? Number two, also, consulting, since you repeatedly highlighted, is starting to see a turnaround. If you could give us more details on how Capco and Rising are doing, and how significant a role you expect them to play when you say the market turns around. Again, I think just from January to December of last year, you've seen 8 significant exits. In your senior management, you've sued 2 of your former executives for joining a rival firm as well. How is that impacting the business here with senior leaders leaving the company? And if you could tell us a bit about what your if with Cognizant, we've seen one of your other peers also send a legal notice. What the conversation there has been like, and finally, any levers for the margin to then get to that aspirational 17% level.
Okay, I'll try to remember every question. So the first one, I'll revenue. So let's talk about the market first. I think, what do we see? The market hasn't changed dramatically, right? The market continues to be the market we have seen for the last quarters, which was a market where, there was a significant reduction of the discretionary spend. And so we had, on one hand, a certain volume of activity going on, actually showing up in our booking number, and yet, the lack of discretionary spend was hurting our top-line growth, in particular in the consulting business, but across the board, in particular in sectors like banking, financial services, technology, communications, and so on. What we are seeing now are green shoots. We are seeing
recording in progress.
The beginning of an evolution of the market. And that is allowing us to, we are seeing a positive trend in terms of revenue from a deceleration to almost stabilization and, going back to growth. So that's the first point, I think. And frankly speaking, I believe, the more I reflect on that when you look back, we have grown, I believe, 27% year-on-year in FY22. We've grown 12% year-on-year in FY20, 11 or 12% in FY23. And this year we are decelerating. And I think it might just be a little bit of the hangover also of an exceptional period during COVID. Yes, you are correct about what you are seeing in terms of growth. Healthcare is doing well, and there's a very significant demand. We are seeing some demand in some other industries, like automotive, like energy, right? and possibly an improvement of the banking sector. Certainly, what we are observing at the moment with Capco leads us to be a little more optimistic. So indeed, the performance in bookings of Capco has been very solid this quarter, and rising as well. And we should, we are cautiously observing the evolution. But I don't think this is something we would have said a quarter or 2 or 3 ago. The point number 2 was on. I don't know if I'll take them in order, but I'll do it. So on the leadership churn, it is part of our strategy. And if you go back to our, the strategy that we elaborated and shared with you back in October 2020, this was precisely part of the strategy around talent to acquire, to enhance, to grow, to build, to invest in talent, and in particular in leadership talent. So we are fully aware of the fact that this obviously is possibly triggering some people to leave, and this is part of the strategy. Today, what I can say is that, one, we have indeed tremendously invested into leadership over the last years. Second, we have a very strong leadership team today. Third, we have now a strong pipeline of leadership as well. And so, that's where we are. Regarding, specifically, case you're referring to, I would ask you to cover it, and then I'll take the next point.
Yeah, so, simply put, when all of us join any organization, we have some contractual obligations. And we are, as an organization across the industry, are similar across the industry, are saying, please comply to the obligations. We are not against any individuals aspiring and growing and meeting their career goals. We are not against any individual going anywhere. It is about contractual obligations moving forward. And on particular case, since sub judice, we will not like to. Specific cases we will not like to talk about. But
what is the reason why you think there have been so many exits?
I try to respond to this question. We do not feel that way, what you're saying. But we realize that when you are bringing talent, we've been also promoting a lot of talent. It triggers a little bit of a churn, and you must be prepared to that. If you're acquiring talent from the industry or other industries, if you are, transforming the organization the way we've done over the last years, and if you're promoting as many talent in the organization as we've done over the last 2-3 years, you have to be prepared to the fact that some people will decide to go. And frankly speaking, I wish them the best. It's okay. We're not taking it, we are not destabilized by when there are decisions like this, because we have the pipeline. May I embarrass my neighbor here a minute, if you don't mind, to say that, Aparna has taken over. We knew Aparna was, the promising talent in the finance function, the most promising talent in the finance function at the senior level. Aparna has taken over the CFO role about a quarter ago, and she's doing fantastic.
A very good evening to all our viewers who've tuned in live to this Moneycontrol broadcast. We're here to talk about Wipro that has just come up with its Q3 earnings, and you just heard the management there. They seem quite optimistic. The numbers, we would say, pretty much in line with what was expected from them. If I have to just take our viewers through some of those numbers, I can read those out for you. The revenues have come in at 22,151 versus the 22,395. So this is just a little bit drop of about 1.1% on a sequential basis. If you look at the EBITDA margins, there too, you're not seeing too much of a change from 16.1%, now coming in at just about 16%. So just a few basis points is what we're seeing. The changes in total bookings have come in at 3.8 billion. Now, this being those order wins that, in fact, Wipro hasn't been that lucky when it comes to those mega deals so far compared to its peers. But 3.8 still seems quite comfortable for them in this Q3. Let's discuss all of this and what it really means for this IT player when compared to its peers, because they have come out with numbers that have quite surprised the street, and which is why today it was pretty much the Nifty IT index and all the components of that index which really pushed the headline benchmarks, in fact, higher to 21,900 is where we saw the Nifty closing thereabout, and the Nifty IT index per se gaining almost close to 5%. Each of those components seeing some spectacular rally in today's trade. So let's get into those details. I have Nirav Karkera joining me now. Thanks so much, Nirav, for speaking with us, and also help us understand where does Wipro fit in the whole scheme of the IT earnings. We've already seen TCS as well as Infosys yesterday, and they came out with pretty much a good, positive surprise, one would say. Muted numbers overall, but that's something that is already being priced in by the markets as well. So if you look at Wipro's numbers per se, take us through some of those and what would be the highlights for you.
So hi, always a pleasure chatting. So the IT earnings is always, really intriguing, to say the least. And in fact, the December quarter is all the more fascinating, for most of us, because this is typically a soft season, and IT has been, bearing the brunt of an economic slowdown since quite some time. So, like you rightly said, Infi and TCS reported a decent set of numbers. Now, I call it decent, not merely on merit of the numbers reported, but on the fact that it was majorly in line with what was expected. In fact, there was a slight positive surprise on the top line front, at least. So while the margins and the bottom line did not really, entail much excitement, I feel the top line surprised a little bit on the positive side, and the order book is looking pretty healthy. I feel, Infi also really tightened its guidance, and that gave a lot of visibility on how are they looking to exit this financial year. So a few good things happening there. Now, at the same time, let's talk about Wipro. I feel, one. So again, Wipro also was typically lackluster, but if you're talking about meeting expectations, and if we were not expecting much from Wipro either, you can safely say that it has met those expectations, because it was slightly lackluster. At the moment, I'd say 3.8 billion sort of order book is looking good. While they say that a 20% year-to-date growth in their large contracts are, is what they've reported, it is a pretty decent thing. While 20% year-to-date looks pretty big, it's not thrilling if you look at it in absolute numbers, but good enough. Of all the large contracts that they've reported, there are some really promising contracts that could mark the beginning of much robust pipeline ahead into the future. So overall, the sense is that Wipro numbers are pretty decent. They are decent in the sense they are in line with the expectations that were subdued in the first place. So not a shocker per se, but nothing to be too thrilled about. The order book is pretty decent at $3.8 billion. Large order wins are majorly in line. The most important thing that I'd like to note is something beyond numbers, and which is the commentary, wherein there was a sort of clear sense where they stated that there's nothing much that has changed in terms of the demand environment. So there that could be an indication that expectations might be slightly overdone in terms of the interest rate cut and expecting the order book to come back. So that's one point to really take note of.
Right. In fact, everyone's really hoping that we see these Fed rate cuts, and that would in fact propel at least IT spends. But the commentary, I think, from all of these three players that have come out so far is that at least not in the immediate futures where they are hoping things would turn around. But let's look at these numbers once again, and if you look at the guidance figure, because that what we saw Infosys also do was lower the upper end and increase the lower end, and I think this is something similar that has come even from Wipro right now, when I'm seeing that their Q4 guidance is at minus 1.5 to plus 0.5, and this they've shortened the both the ends, trimmed that on both sides, kind of rebalancing. So why are we seeing this with the IT players, and why do they think that they're going, getting people to giving them that little positive touch, but also saying that there is some bit of money that could trouble us in the future?
Yeah, so like you rightly said, it is a very unique thing that we saw with Infi's guidance also. So I won't say exactly unique, but it was least expected such a narrowing or tightening of the guidance. So overall, the guidance has been lowered. Okay, in a way, when you reduce the cap, the guidance has been lowered slightly. That's the fact of the matter. But at the same time, when you increase the lower end, you are basically giving some more clarity onto what can one expect. So the leeway is far narrower than what it was initially. It is the same with Wipro as well. I feel, considering the third quarter generally, it is slightly softer season this time around. There have been anomalies, especially in context of Wipro, that have been arising on, from the facets of a one-time wage rate hike and increased furloughs, etc., which is typically seasonal also. So as we move into the fourth quarter, the IT companies are having a much stronger sense and are looking at their estimates with a much fairer sense of semblance, I would say. Because so the previous comment that I made on their expectations that demand is not going to return in a hurry, I feel that is also helping them tighten the guidance spread. Okay, so because since they said that this quarter is not very different from the past quarter, and they are forcing the next quarter to also not be very different from this quarter, so they are able to narrow down their guidance into a much more firmer and tighter range. So I feel this expectation of the demand environment is resulting in offering such increased clarity. While the range is tighter, the clarity is also higher in terms of what can we expect.
Right. Let's also talk about attrition and headcount, because that is something that has really plagued these IT companies. And if you look at Wipro per se, right from the top level management, that we've seen a slew of people change, and hopefully we'll hear from the management on that as well, and how they are looking to go about those things. But if you look at just attrition, that has come at a 10-quarter low, which is pretty good at just about 12.3%. Even for Infosys and TCS, they've managed to get those numbers right. So are we going to see an uptick from here on? We were saying that, there is some bit of normalcy returning, and which is why that whole fight that they used to have, the tech companies versus the startups, are we seeing that really, come, take its place and everything's getting back to normal?
Yeah, so one thing I'd say is that while the attrition has dropped and dropped significantly across the board, and kudos to Wipro for getting a firm handle on that. But one important thing to consider is the context in which this attrition is being reduced. So the attrition is reduced, at the same time the hiring also is not happening at quite a pace. Right, so there is no incremental headcount. In fact, at a net basis, if you see the headcount also sort of, if it is an indication of the upcoming work that's coming of any sorts, you don't expect a lot of action to be happening in the upcoming quarter or the near term as well. If you look at a net headcount basis. So this problem has been plaguing the industry since quite some time. But I feel, first things first, you get your attrition under control. I don't think most IT firms are trying to hit the campus very soon. And talking about the churn in the senior management and leadership, I feel this is while you mentioned this is a phenomenon in Wipro, it is likewise across other IT firms also, wherein significantly senior and leadership positions have observed decent amount of churn in the past 1 year itself. Right. So, of course, these are large, well-run corporates, and, they state that the succession planning is in place. Of course, no seat is vacant. So the seats are being filled, and most of them are promoting talent from within. And that's the more sensible thing to do as well. The real question is, how does this change the future course of action? And now that's something that we'll have to just wait and watch as time progresses, and as these newer leadership and management people start making decisions, and the decisions start taking effect in form of results.
Right. My final question is going to be on AI, because that is something that has dominated the press conference as well for all of these players. And Wipro has gone on to say that, 200,000 of its employees, they're training them in their in-house AI. They're trying to bring that talent out. Do you think that there is that kind of demand even there outside, and which is why it is imperative for these IT companies now to get on board and, not just try it out? Of course, there are those tie-ups with all of those, with NVIDIA and the likes. But what are we likely to see in the coming quarters from here?
So I feel undisputably AI is the next frontier. All right. I don't think it's a question of if; it is more a question of when. And looking at the macro environment and looking at how clients, especially in the West, are looking for more cost efficiency projects than transformational projects and growth projects, we may see AI projects coming in at a slightly slower pace than what we're anticipating right now. But of course, I do appreciate the need for upskilling talent and especially in-house talent, because this is in one way an exercise to future-proof one's own business. And like you said, Wipro has definitely spoken about how they're upskilling, but this entire agenda of upskilling in-house talent and bracing for the AI frontier is a common theme across all other IT companies as well. So I feel it's more of a future-proofing thing. I'm not expecting it to translate into top line anytime soon. At least not in the next 1 or 2 quarters. That's the pace at which it's happening. But of course, upskilling will also take its own due time. So what better time than now when the demand environment is soft and you can afford to focus on upskilling during the downtime, relative downtime per se.
Well, I'll have to leave it at that. Nirav, thanks so much for giving us your time and getting us perspective on how one should be looking at Wipro and its Q3 earnings. And to all of our viewers who've tuned in, hope those numbers from Wipro, added to that IT rally that we've been seeing today, at least in today's trade, and we'll wait and see. HCLTech is yet to report its numbers, and we're going to hear from that management at 6 p.m. And that's when you can tune in to Moneycontrol for that live as well. Thanks so much for everyone who's tuned in.